Most people think recovery is the goal. If something breaks financially, the focus becomes fixing the damage and returning to stability. And that sounds responsible. And after collapse, recovery feels like success. But recovery isn't the highest level of financial control. Protection is. Because the strongest systems aren't defined by how well they recover. They're defined by how rarely they collapse. And that difference between recovery and protection changes how systems are built. The common belief is simple. Handle problems when they happen. Fix damage when it appears. Respond when pressure becomes visible. That feels practical and efficient. But reactive systems always live close to risk. Not because people lack effort, but because reaction always happens after damage has already begun. Recovery fixes consequences. Protection prevents consequences. That difference is structural, not emotional. And once understood, behavior begins to shift. Not dramatically, but consistently. Protection isn't complicated, but it is disciplined. Every protected financial system follows the same basic order. Not perfectly, not instantly, but consistently. Protection begins before pressure appears, not after. And it works through repetition, not urgency. At its simplest level, protection rests on 3 repeatable actions. Reduce exposure before pressure rises. Maintain margin even when things feel stable. Correct small problems before they grow. None of these actions feel dramatic. And that's the point. Protection is quiet. Not visible and not exciting, but extremely effective. Most collapse happens when small risks were allowed to accumulate. Not because large risk appeared suddenly. And protection interrupts that accumulation early, before damage becomes visible. Picture a wall with space between it and rising water. That space is margin. Margin absorbs pressure, and pressure stays contained. Without margin, pressure reaches the wall immediately. And the wall carries the force. Without protection, systems depend on recovery. And recovery, as already established, is slow, expensive, and uncertain. Imagine driving without brakes, but with excellent repair tools. That may sound extreme, But financially, that's exactly how many systems operate. There is confidence in fixing problems, but little discipline in preventing them. Prevention is what keeps pressure small. Without protection, pressure builds silently. Expenses increase slightly. Risk expands gradually. And flexibility decreases slowly. Nothing dramatic happens at first, which is why it goes unnoticed until collapse appears and suddenly feels unexpected, even though the warning signs existed long before. Protection interrupts that cycle. Not dramatically, but early. Protection doesn't remove risk. It manages proximity to risk. That difference matters. Risk is unavoidable, but exposure is optional. Protected systems don't eliminate risk. They control how close they operate to failure. That distance between pressure and collapse determines stability. Not income, not luck. Distance. And distance is created through discipline, not reaction. Rule number 11. Protect systems before pressure builds. Not after, not during, before. Protect systems before pressure builds. Because once pressure arrives, options become limited. And limited options increase risk. Prevention expands options. Reaction reduces them. That difference determines survival under pressure. Most people trust recovery. They believe resilience means fixing damage quickly. And that belief feels strong. But structured thinkers trust protection more than recovery. Not because recovery isn't important, but because recovery is expensive. Protection is efficient. It reduces the number of recoveries required. Not perfectly, but significantly. This shift changes daily behavior. Small decisions become preventative, not reactive. Small corrections happen earlier, not later. And earlier corrections prevent larger consequences. That pattern repeats quietly and strengthens systems over time. Protection often feels unnecessary when things are stable. That's when it's the most important. Stability creates comfort. Comfort creates complacency. Complacency reduces attention, and reduced attention allows small problems to remain. And small problems accumulate. And accumulation increases pressure. And pressure eventually forces reaction. Not because protection failed, but because protection stopped. This pattern repeats across financial systems everywhere. Not because collapse is unavoidable, but because protection is abandoned when stability appears. And stability without maintenance weakens over time. Protected systems behave differently under pressure. Not because they avoid difficulty, but because they maintain flexibility. Flexibility allows adjustment. Adjustment reduces strain. And reduced strain preserves structure. That sequence repeats across stable systems. Whether personal finances, businesses, or institutions. Protection preserves movement. Without it, movement becomes fragile. And fragile systems collapse under pressure. If protection prevents collapse, the next structural question becomes clear. What creates protection consistently? Not once, not occasionally, consistently. Because protection is not built from awareness alone. It's built from habits, repeatable daily habits. The kind that operate automatically, even when attention is limited. And the next phase of this system moves into habit formation. Not motivational habits, structural habits. The kind that quietly builds protection over time. Before pressure begins.